Hi everyone, Sam here. Welcome to another massive Monday market update. I've got three big things to show you, and I will get started on Ethereum in just a second. Just wanted to say congratulations to everyone being here right now, laying the seeds in this bear market to bear fruit in the bull market. We're already seeing signs that we have reached that overextension to one side of the market, and now we're really looking for that small subwave up to try and give us the confidence in the floor that we're starting to form, and then we begin to move up again. There's going to be bumps and bruises along the way. Don't get me wrong, this market is highly volatile, so you need to get used to that, but having that longer term investment thesis is absolutely crucial to your success in this market. And again, all the money to be made in this market is made in bear markets. I kid you not. So get really excited about this phase that we are in. There are so many opportunities to come. All right, let me crack into the Ethereum chart, because it has done something that is super important and hugely consequential to Ethereum and indeed altcoins, because Ethereum tends to run and then altcoins will follow afterwards. It is just how liquidity moves. Now, don't get too excited. This is going to be a big alt season or whatnot. We should see some small pumps here and there of some altcoins, mainly because one, Ethereum is leading. Yes, liquidity is moving in, but also because a lot of these altcoins are 90% down from their all-time highs. They are going to have a bit of a relief run soon. Here and there, of course. So this is why we really advocate dollar cost averaging as a core part of your investment thesis, because you can capture a little bit now at a very low risk, not putting all your capital in the market, but just capturing some here, lowering your average buy price. If the market runs, fantastic. You can still buy some more a little bit higher when we get better readings, more confirmation, better data. But right now, this seems like a very good risk reward area to enter the market in a very small sense. What Ethereum is doing has captured its 200 weekly moving average. Now, if you're following our newsletter, if you've been following our previous updates, the 200 weekly moving average is so important for, let's say, Bitcoin and Ethereum primarily, but it is the guidepost, it is the floor of these macro market cycles. So macro, big picture. So if we look back on the previous 4-year cycles that Bitcoin and Ethereum has gone through multiple times, it always comes back to the 200 weekly moving average to find the floor of a bear market. And then we begin to scoop our way up in a bit of a bold fashion. And it is just so important that you recognize this, because it can feel like the world is caving in as we're retesting that area or even going beneath. This is the first time we've actually gone beneath it for an extended period of time, on Bitcoin at least. I'm not sure about Ethereum, go back and check that, but just have a look how, again, how consequential this red line is. So on Ethereum, we've actually have ducked beneath it previously. Bitcoin, we haven't. But you see here, this was the last bear market that we had. We were underneath, but this line, this red line, is a core component of giving us a guidepost on where we can begin to think, all right, well, this is a huge overextension here on the high, and now we've come back to this long-term moving average. Again, I wrote it in the newsletter in June's edition, just how important this key moving average is. It's what a lot of metrics are based on. It's what a lot of people look at. And it is where a lot of big money just sits waiting to replay these 4-year cycles again and again. And again, what's happened here is Ethereum has reclaimed it. So what I mean by reclaim it, if we just zoom in for an ultra clear picture, well, beneath it, test, rejected, big red candle came down, test, rejected. We're still gradually moving up though, and I'll zoom in and show you what I mean. But this candle here, boom, really ripped through this red line. You can see this body of the candle, and we've just had the weekly close just about 5 minutes ago. So this candle has closed above the red line, and now we're shaping up for a full breakout. It really matters now whether we can break 1400 for the short term. But for me, long-term signal, us breaking this shows that Ethereum wants to break out, have a full recovery rally, maybe up to 2000 before we do see some headwinds. But these will play out over months. This is what we just got to get used to, is a bit of patience in this bear market. So again, you are going to have opportunity, and I want to encourage you not to feel the urge or succumb to the urge to FOMO into green candles. What you want to do is just recognize this for what it is. It's giving us a bit more confidence. When we get back on top of it and maybe retest the red line as support, then we can get super confident that we have found the bottom on Ethereum, and then you can layer in capital a bit more heavy there. But super important that we have broken that. I think it's a great guidepost for Ethereum going into the merge, which should happen in the last in the next 3 months, you'd say. But again, we've been fooled before about Ethereum, 2.0 progress. So we will see. But yeah, this is shaping up really nice for Ethereum to have a fairly substantial relief rally. All right, Bitcoin, yeah, doing something fairly similar. But a key component of that is it hasn't broken its 200 weekly moving average. Again, it is my guidepost to get very confident that the Bitcoin bottom is in. Hasn't done that yet, so cannot be confident. Ethereum running is good, yes. But Bitcoin, you really want to watch this, because if Bitcoin just suddenly falls over here, all those good gains that Ethereum's making, that happiness that I'm sharing right now that it's broken the 200 weekly, that will evaporate because it likely falls straight back down through it and rips all the FOMO buyers in half. So just remember that. Bitcoin though, just a quick glance, it's making a really nice formation in terms of these higher lows. So the low here, higher low, so trying to form a new trend. We do have a higher high just over here, which is important, but this next high is lower as well. However, just on the RSI, momentum is building. So overall, this is fairly neutral, but I would be leaning a bit more bullish here. If we can hold this huge volume support here, you can see this big bar here, we just want to stay on top of that. If we crack on over to the weekly, just quickly for a bit of guidance, Ethereum is leading Bitcoin right now, like I said, with that 200 weekly. So that's that line there. Bitcoin gets above that, retests support around 22,000. Happy days. We can get reasonably excited the Bitcoin bottoms in, barring any big macro headwind that comes out of nowhere, which is bound to happen. I just would feel more comfortable with one of those things happening a bit higher. You forget near 30,000, we get a big macro headwind. What could it be? Debt market in a bit of trouble and whatnot. Then we have a little bit of a buffer that we can go back down to 17,000 or 15,000. But if it happens here, we likely go to 10,000 or lower. Not saying that a big headwind is guaranteed to happen, but you just look at how things are shaping up in the world. Things are beginning to break. Things are collapsing. So yeah, just keep that in mind. Really want to reclaim this 200 weekly. There was another thing I wanted to cover. Yes, so that is the hash ribbon. So if you weren't aware of this metric, it does show you when Bitcoin miners become insolvent. So they're the auditors of the network. Now, historically, whenever Bitcoin miners capitulate, there's a phase there where a lot of these miners begin to sell their Bitcoin onto the market, try and keep their heads above water, try and remain solvent. But in the end, it is largely futile. A lot of them, or inefficient miners, will go under, they'll capitulate, they'll sell all their Bitcoin. It creates sell pressure on the market. Once that phase has been flushed, it is often a tremendous time to buy Bitcoin, just looking at this indicator. So if we look up here, you can see on the chart over here, we had the big drop from 60,000 down to about 28,000 before we had the run up to 69. We had the hash ribbon fire there, where suddenly miners became unprofitable, or at least some of them. And you can see here the capitulation flared there, then the buy signal hit around here. So very, very good signal because we had another run up. These, though, are probably the best hash ribbons I've seen. The capitulation in COVID, that huge dump down to around 3,000 capitulation, then a buy signal here, then we ran out of it. We had another capitulation around here, just under 10,000, or yeah, around 10,000 capitulation, then a blue buy, and then we had the huge run up to 60,000. And then we had another one up here as well before the next run up. So hash ribbon, do not ignore it. Time and time again, it comes through with the goods. So just keep that in mind, that miners do go through phases. It is very natural. It is a nice little cycle of life that happens in the Bitcoin network. The strongest and most powerful miners always remain, but everyone still has a chance of mining thanks to the difficulty adjustment. Please look into it. I won't get into it today, but it is a very, very cool programmatic money supply, and at least it's programmed in, and it really keeps the whole system honest and moving at as highest efficiency as possible. All right, just covered that. Yes, keep an eye on the 200 weekly to break. If Ethereum does remain above it, then I would think Bitcoin next week or the week after really has a run at it, because we're just showing strength above 20,000 right now, which is really, really nice. Now, I wanted to check on the dollar, because the dollar, we really want to see it start to top out. Because Bitcoin largely historically has been inversely correlated. And what I mean by that, when Bitcoin is roaring towards a high or a top and a peak, the dollar is at a low ebb. When the dollar suddenly reverses and gains strength, Bitcoin has always, if not very rarely not, gone down into a bear market. So we have to watch that correlation. Right now, the dollar is just a surging wrecking ball runaway train. I could go into the macro, but I won't do that today. But if we just look here, this looks like a fairly good blow off top point, 109. Now, I'm not 100% sure it's blow off top, you can never really be sure. RSI losing momentum, that's a good sign. Sellers definitely stepping in here, you can see on those red candles. A pullback down to these levels, 106 is probably on the cards. I do see a pullback in the dollar coming, just with how much strength's been coming into it, and it seems the consensus trade. But in the future, dollar after a bit of a pullback should regain a lot of strength. If we just go on out, and I'll show you what I mean by this here. Let's go. Oh no, that's fine. Stay on the daily. So if you see here, where was this? December 16. So Bitcoin roared into a bull. You see as the dollar drops, Bitcoin was actually in the 2017 big run up stages. So run up, 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 run up. Then Bitcoin made a top when the dollar bottomed at around about 88, 89 cents compared to other fiat currencies. That's what the DXY, this is what this chart is telling you. It's comparing the US dollar to a bunch of other fiat currencies. So Bitcoin made the top. Now, what happens to Bitcoin once the dollar reverses this way, upwards towards this line? Bitcoin goes into a pretty significant bear market. It's 218, 219. It just rolls all the way up until we see a bit of a reversal after March 20, so the COVID crash. Then Bitcoin roars back above 10,000, goes all the way up to 60,000, and then does its thing up there. And this was another Bitcoin top. So 89 again, bang, bang, bang. And then what's happened? The dollar's reversed all the way up and Bitcoin's fallen into a pretty significant bear market. So Bitcoin actually held up quite well throughout this period, but towards the back end of the year, based on macro conditions and the dollar rising, Bitcoin just got crushed. And now we're in this strange phase where do we see a pullback to around about that 102, 100 level to maybe confirm that this is really strong, and then the dollar roars, but gives Bitcoin a bit of a runway to go back to 30, 40, 50,000 before we see another correction, another dip. So it's just on my mind, it's what I'm looking at. All right, and just on that 200 weekly, if you are not following our or subscriber to our monthly newsletter, which we released in June, I went through the absolute triggers you need to be looking for, what we've just discussed, what you need to be looking at on the chart. Very, very simple explanations about the 200, why it's important, and other really important metrics on the monthly that you need to be looking at, including the 21 moving average and whatnot. You just see here, I've written about it. It's very, very quick, very good read. If you want that extra information based on data, this newsletter has to be on your must-read list every single month. We've got another one coming out in another 2 weeks. So it's the last Thursday of every month. Just keep that in mind. We also have in this newsletter buy and sell signals on the weekly. So zoomed out accumulation zones for you guys. So just keep that in mind, that if you need that extra helping hand in your investing, we have that here in this monthly newsletter. So if you're not a member, if you're not part of it, make sure you do this, because it will aid you in your whole investment strategy. So guys, enjoy today, enjoy the rest of the week, and let's hope we see some rallies, because I think it could get a little bit exciting for a little while, as long as the macro situation holds up. So big asterisk over our head. But apart from that, have a wonderful day, and we'll see you on Wednesday for our altcoin Bible. Ta, bye.